James, let's start with a very interesting point you raised, which is the $2 trillion company. You've skipped from betting on the next $1 trillion company, gone right to two. Alibaba's that company. How does it get there?
Yeah, and it's absolutely something I feel quite strongly about. I think the current pattern of capitalization versus the American peers is wrong. And why do I think it's got the capability to get to $2 billion? It's not just the extreme profitability and dominance of its historic and current retail business. It's that the whole area of enterprise and corporate software and the cloud in China is both very underdeveloped, but Alibaba's position appears to be extremely strong. So I think the growth drivers for the future are profound. In addition, one can add in the finance side as well, which, although diluted for them, is pretty powerful.
Well, what are some of the challenges of actually deploying capital there? Because a lot of your bets at the moment are based in China. It's not the same as investing in the US. Clearly, it's not the same as investing in Europe. What are the challenges and how do you navigate them?
Well, the first thing I'd say is that the people who run these companies, as I think you'd recognize, Ed, are very much the long-term owners, long-term deployers of capital, in many cases the founders of these companies. So there is that similarity with at least the West Coast American model on that front. We broadly find that the innovative companies, those that the government feels is helping them drive the economy of China forward, are allowed to have their role and their dominance, but they do occasionally have their wings clipped. And ironically, regulation in China is probably more effective than it has in Europe or America.
But that's a marked difference, obviously, between China and the US and Europe, is that you do have a much heavier state involvement in these big companies, particularly, as you say, the ones that are viewed as driving the economy.
Yes and no. I mean, I feel quite interested at the moment in the degree to which these Chinese companies, the environment's made so it's still profoundly dynamic. I mean, if you think about the big American technology companies, they are the same ones. We haven't really seen anything like the emergence of ByteDance, TikTok parent, in America in recent years. So, I actually think the environment that somehow has been created by this mixture of influence is probably more dynamic in China than it is elsewhere.
Looking beyond the coronavirus and obviously the fluctuations that is causing in the market, how much of your bet on China depends on political stability?
Oh, I think any serious level of political unease in China would interrupt it for some period of time. I'm very unsure what is the best method. But I think to an extent, we've always felt that you will get prior indication, because I think ultimately the legitimacy of the Communist Party depends on delivering the economic and societal goals. And hence, I think you see that breaking down first. I don't think politics will be the first thing to change.
Let's talk about the IPO process here. You and I have spoken about this often, the damage that has been inflicted on it by certain types of investing. SoftBank has been really at the heart of that, and the WeWork debacle, I suppose, was the sort of peak of that bad model. Do you think they're to blame for breaking the IPO model?
I think they have a share of responsibility. I think we believe that the model is very broken in itself, from the process itself. We've seen the Spotify type answer to that. But I think in a deeper way, I don't think companies need to go public until later. I don't think they want to go public till later. And I think that is structural. And I'll also say I have quite a lot of sympathy with it. I think you can pursue the longer term goals. And if I may be complimentary to many of the venture capitalists, I think very often being owned by, say, Benchmark and Sequoia is actually very good for a company, whereas it's not always clear that public market owners are as supportive and sympathetic.
But if you have this shift where a lot of the gains are being contained within the private market, isn't that problematic? Because it also concentrates a lot of those gains in the hands of the few, basically the rich.
I'm very sympathetic to that, and we are trying. We obviously don't have enough influence to be able to alter it all ourselves, but we are trying to give people access and at a much lower cost. I know we're not directly involved with being in America, but our investment trust in the UK charges less than 0.5% to give you access to all of this stuff.
A company you and I speak often about, Tesla. We've spoken to you often on this show about Tesla, and usually when it was at a much lower price, in fact, I think always, than it is today. It's at around $7.25 today at the close. Are you sellers at that level?
No, but I want to be completely honest. We have some clients who have size of holding restrictions. And as we've already explained to the company, sometimes in the course of the last month or two, we've had to do something about that. But structurally, no, we actually think the company is stronger and more competitively advantaged, and that outweighs the increase in the share price. So we're more buyers on weakness than anything else.
What level does it have to get to before you say, this is it for us, we'll sell?
I honestly think the pattern these days, Ed, and we have touched on this, is much more that increases in share price are tending to show you that the company is winning in a very large area. And I think the opportunity set for Tesla has got greater, not just in the extent of its leadership over the industry, but in many of the other activities from solar onwards that we're talking about there. So I don't think I can give you a figure. And as you know, I don't really like to be tied down to one number in it, but we'll tell you when we got there.
All right, I promise if it hits 5,000, we'll have you back on to talk about it.